Next question. The following figures are collected from annual reports of a company called XYZ Ltd. Net profit earning after taxes is 30 lakhs. Outstanding 12% preference shares of rupees 100 lakhs. Number of equity shares are 3 lakhs. Return on investment R is 20%. Cost of equity of the company is 16%. What should be the approximate dividend payout ratio so as to keep the share price at rupees 42 by using the Walters model? Before I explain the question to you, I want you to make an effort for doing this answer and put your answer in the chat box. So this time friends, the question is providing the information that you are required to compute the dividend payout ratio so that the market price of the equity share is 42. That is the question. So for this, first of all, what we have to do, we are required to make the computation of the earning per share. How to compute the earning per share? We know that 30 lakhs is the earning after taxes, 100 lakhs is the preferential capital, and the rate of preference dividend is 12%. So 30 lakhs minus 12 lakhs. So this is 18 lakhs. That is earning available to equity shareholders. What is the number of shares? 3 lakhs. So what is earning per share? Earning per share is 6. That is the way the earning per share can be calculated, 6 rupees per share. Afterwards, Walter model has given a very simple formula. MPS is equal to DPS plus EPS minus DPS into R upon K whole upon K. As far as the dividend per share is concerned, that is required to be found as balancing figure. Do we have MPS? Yes, 42. Do we have EPS? Yes, 6 rupees that we have recently calculated. R is 20%, K is 16%, K is 16%. So this is required to be found as balancing figure. Suppose by solving this equation, suppose the dividend per share comes to 1 rupee 20 paise. So 1.2 divided by 6 into 100. That comes to 20%, and that is the way the final answer is required to be found. So let us now execute the answer. Working note number 1. Calculation of earning per share. In that case, it is earning available to equity shareholders divided by number of equity shares. Earning available to equity shareholders is earning after taxes minus preference dividend divided by the number of shares. What is earning after taxes? 30 lakhs. What is the preference dividend amount? 100 lakhs into 12%. So it is 12 lakhs. Divided by number of shares are 3 lakhs. So 12% of 100 lakhs comes to 12 lakhs. 12 is deducted from 30. So the numerator comes to 18 lakhs. Divided by 3 lakhs. So earning per share is 6 rupees per share. That is the way, so the earning per share can be calculated. Working note number 2. Calculation of the dividend per share, comma, so that using Walter model, P0 is rupees 42, that is market price of the equity share. So the formula is like this: MPS is equal to dividend per share plus earning per share minus dividend per share into R upon K whole upon K. Market price of the share is 42. I am assigning X variable to the dividend per share. 6 minus X once again. R is 20%. K is 16%. whole divided by 16 percentage. That is the way the x is required to be found as balancing figure. 42 into 0.16 x plus 0.2 divided by 0.16, that comes to 1.25 into 6 is 7.5 minus 7.5x, sorry, minus 1.25x. So x minus 1.25x is negative 0.25x is transferred on the opposite side and it will become positive. 7.5 minus 42 into 0.16, that is 6 rupees 72 paise. X is equal to 6.72 is deducted from 7.5, that comes to 78 paise, divided by 0.25, and the answer comes to 3 rupee 12 paise. That is the way the dividend per share is calculated, 3 rupee 12 paise. Once you compute the dividend per share, then finally you will compute the dividend payout ratio. So dividend payout ratio, in that it is EPS and EPS. For 6 rupees of the earning, dividend per share is 3.12. So for every 1 rupee of the earning, dividend per share is this amount. So it is 3.12 upon 6. That is 52%. This is the way the dividend payout ratio is required to be found. First of all, friends, we have computed the earning per share. Simple. Then dividend per share using the Walton model formula. And based on that, so the dividend payout ratio. So if at all the company keeps the dividend payout ratio 52%, market price of the share will be 42. Right on answer? If the company keeps dividend payout ratio as 52%, comma, market price of equity share would be rupees 42, full stop.